Now, as you can see in the price action, we're expecting lower prices to those sell side liquidity. Their sell side liquidity. And if let's identify the midnight opening price. Now, as you can see in the price action, we're expecting. So here's the midnight opening price. As usual, the market. Good morning. By the way, I didn't get it to you. I was actually taking the attention of this price action. So as you can see here, there's okay, we're not here, but price action is continuing. We're targeting those sell side liquidity. Let's see what price, or we'll probably do this. Put that as a fair value gap. This is a fair value gap. Price can actually reach to that fair value gap. And from jump street to 7, price went from 7, rallied up to take up buy side liquidity. Here you see this price did not sweep a liquidity, so this market structure shift was not valid. You see, this is a market structure shift here. See that market structure shift here, then enter into the fair value gap. Cheats you that we're going higher, then boom, drops, and it's above the bid variable price. So we're selling. This is a trap because we didn't see any sell side liquidity taken out fast. So that's something that should include in your notes. Another thing is that you will want to, you've seen how prices bought. Let's just a minute. I really hope I'm clear. So what you're expecting is seeing price coming to the sell side liquidity, to these ones here in the 1 minute. You saw here this price entered that fair value gap there. So actually you see that price action, you see how price actually respecting those sell side liquidity that I marked earlier. The sell side liquidity taken out, our first one has been taken out, then our second one will be this one. That's what I expecting price to be, and I've seen prices taken out some buy side liquidity. So yeah, that's actually what's happening today. And you see how price has actually gone to that fair value gap that I said, boom, declined. And you're actually seeing those other sell side liquidity being taken out. These other ones are my interest, but as price reached here, if I will be in the session, but today is Friday, yesterday we made a lot of money, so there is no need of pressing so much. That's a 20 pound, but I'm not going to stay here long. We're going to, let's see if price will actually, let's see the 15-minute. Oh, it's an order block. So you see, that's an area that you'll want to take out something. That's a logical area that you'll want to take out something. See how price that order block. Then looking in the hourly time frame, you're actually seeing a week. So the higher time frame price, there's a buy side liquidity taken out. You see this buy side taken out, take out buy side liquidity. Then we're looking for sell side liquidity. The first sell side liquidity taken out, this one also here. So this one can be our interest. This fair value that price has not touched. So let's see if price will actually take that sell side liquidity. That's my target. That sells liquidity. Let's see if price will take it out. Let's continue watching price. Now, as you can see, hope my audio is audible. So, as you can see, we are this is the 8:30 open, the 8:30. So let's mark it. You will want to buy above the 8:30. Let's look at the 15-minute time frame. If it creates a fair value gaps or come above here, main test is down here, and yeah, this and also that sell side liquidity to be the optimum. So it's that. So we are above the 8:30. So you want to sell and decline to that low. The sell side liquidity. So that's my target. 15 minutes. So it might create a fair value gap. Then creating a fair value gap, then price rallies to the fair value gap at around 9. Then boom, declines lower and lower. But at these levels, these are levels that you want to take partials. You see here, before the 8:30, these are the levels that you want to take partials. And yeah, but this is my target. If price is there, I'm done for the week. From there to there, it's actually around 30. See, and leave a run at 2 around and close it at 12. So you have that one. So let's watch price. It can come to a fair value gap. Let's mark that fair value gap. But as for this point, we are only remaining with less than 5 p, around 6 pips to our target. That's a area you want to take partials. Yeah, these are area that you don't take partials because it's 6 pips. So you cannot take partials. But price is coming to that fair value gap. I don't want to see it declining to this one. Let's do that. Let's watch price and see. Check. Now, what you will want to see price doing. Now, watch this one. You see this a swing high, and we're also above the 830 open. So, price will do magic here. Price will sweep that buy side liquidity. Let's see it. Buy side liquidity. After price sweeping that buy side liquidity and all, it's also inside that buy side liquidity, also a fair value gap in the 15 minutes. Price will use that, and it's above the opening price, so price will actually want to rally to this sell side liquidity. After that swing high in the 5 minutes and the fair value gap in the 15 minutes has been taken out, but this level, let me delete this one. Let's mark that one now. You see how they align? You want to see price coming to that area, then declining lower. Yeah, so that's what you'll want to wait for. Let's continue watching price. So let's see if it's position. Now, uh, I've actually identified an SMT, so let's watch this one here. hmm No, it was not an SMT. So yeah, I'm expecting price to do that what I've said, then decline lower. Or it can continue declining lower without taking other buy side liquidity, but it's also inside the 5 gap in the 5 minutes, so I'm probably gonna want to see this sell side liquidity taken out. So when we mark this on this, when price was here, just the same thing that happened yesterday. And you'll have seen also prices consolidating here. Let's watch if it will take prices up here to this buy side liquidity, then decline lower.
If you're a new trader and you're less than 6 months in experience with using my content, you shouldn't even consider those.
You don't know enough. You don't know enough about yourself. You don't know enough about the things that's going to lead to your ruin. And it's not my concepts that'll cause your ruin. It'll be your impatience or your insatiable desire to get out there and just do something, because doing something feels productive, and back testing and studying doesn't feel productive. For a long time, you'll feel that way until you get to that point where you know what you're looking for. And even after the initial surge of these types of report days, the visibility becomes perfectly clear. You know exactly what you're looking for. And when it materializes in the chart, you've already anticipated it. You're not reacting to it, you're anticipating it. And that's a level of confidence that really can't be articulated. And I always ask my students all the time, what does it feel like? Once you get to that point, what does it feel like? And it's interesting to always hear their response. And they still, they understand what I mean by saying it's hard to articulate it, because the words don't reach far enough to give you that. It's like a superpower. Like, you really understand yourself, you understand your model, and you know that you're not going to fall victim to the retail pitfalls and snares that I did as a young man, and the majority of everyone else out there that aren't aware how markets book price. So, for clarity and for the record, you absolutely can trade the non-farm payroll Friday, but it can't be ahead of the report, and you should not try to do it until you have experience. That's all. That's all I'm saying. I want you to learn how to walk before you run. In those markets, they're fast. They can move extremely quick to a liquidity pool or an inefficiency, or whipsaw you real fast. And you need to be able to know, okay, this is not one of those days where I want to be a participant in. You get burned one time, stop. Not worth going back in. If you make a win and it's nice, stop. Be content with that. Don't get wrapped up into trying to prove yourself when you have these clowns on the internet that talk nonsense, and then you got to feel like you got to go out there and slap the market around just to show them that they're nobodies, they're insignificant piss ants. You don't need to do that. Trading is for you to make more money and change your lifestyle, not to impress people that you can't like or find an affinity for, because that's what social media is. It's a big cesspool of assholes and idiots. Everybody that's making money with my content had that same struggling point. Listening to outside interference, doubts, hecklers, things like that. And you have to tune that stuff out. And retail Rondas walk out there thinking, wow, look how far I can walk out. There's no water out here. And then all of a sudden, tsunami comes in and they hang 10 for the last time. So the bottom line is you don't want to be caught up in that. When these big moves like this occur, these are characteristics that as a new trader, as a new student, you're not going to know. You're not going to identify it. And you may view it as something, oh, this is one of those retail patterns that I looked at. And look at this candlestick. You have to know candlesticks, because candlesticks will tell you that it's all nonsense. It's literally nonsense. These markets run on macros, scripts. They're absolutely controlled by AI. And when they're not being controlled by AI, manual intervention comes in, and manual intervention always comes in at these big market reports. And you cannot know, nobody can know, not me, not anyone else, and anybody else tells you they know, they're fucking full of shit. You can't be positioned ahead of them because you don't know what they're going to do. But you wait. Once they do that first measure of manipulation, it's over. It's done. The narrative is easy then. You can see what they're going to run for next. It's over. The guessing game part is now removed. It's a sit, wait. Wait for that mark to walk his ass into your crosshairs. And when that happens, you take a deep breath, you release it, and you hug the trigger and take it down. But you have to learn to wait. See, usually what happens is people know that these market drivers are very animated. It sends the price higher, sends the price lower, and they want to be a part of that. And they know they're not going to get the high. They know they're not going to get the low, but they just want to get a little bit of the action in the middle. But you don't know where the middle would be because you're new. You don't know if you're getting caught up in a move that's going to be sustained in that direction because you haven't been doing it long enough. And you won't know yourself well enough if you're inexperienced to know what it feels like to get out. If you know you're probably wrong, you're not going to know that. So you're going to be paralyzed by the volatility. And like a deer in headlights, you're going to be staring. And it might be running against you and you just won't get out of it. And then all of a sudden, 100 handles, you're decimated. You didn't use a stop. Your account's gone. It's over. Thanks for playing. All of those things are avoidable. So when I teach don't trade on Mondays, that's not an every Monday thing. There's context that needs to be applied to that. Look at every single Monday. If there is no FOMC or non-farm payroll event in the latter portions of the week, look at every Monday as a consolidation day that sets up the weekly scenario for that weekly range. Usually Mondays will be treated like an Asian range. Okay, think about it like that in terms of Forex for a daily range. It's that quiet period where the market usually allows sentiment to build up, and that sentiment through the trading volume that comes in on Monday, then market makers will use that book to map out how they want to use the weekly range, then take them and run them against the, rig them across the coals. Now, there are some times where I might sit on my hands and not trade on a Monday, waiting for more information. And that Monday may become animated and actually present more opportunity than I expected. I may not have any plan of going in on that Monday, but it may change depending upon how we open up and how we traded. And I'll go in there at 10 o'clock to noon and do something. And if it really runs nice in the morning and it leaves some really clear, obvious liquidity, then I'll use that in the afternoon session, PM session, silver bullet, or I'll do the last hour of trading. But it doesn't mean I have to sit down every Monday and do it. So there's a lot of things that have to be weighed out. But I'm generally not trying to trade on a Monday because I want to see what the weekly range is going to do. And I don't have to have the highest high and the lowest low, especially in this volatility, because it can make another pass and wipe out that previous intra-week high. I don't have a problem getting stopped out and taking a loss in that situation. And if everything still stays and remains the same, and I think that was a stop hunt, I'll reposition and ride it where I think it's going to go. But you as a new student, and honestly, folks, be genuine here. You know where you are in your learning right now. You know what your experience level is. Would you have the confidence to get back into a trade like that? Right now, you wouldn't. And you wouldn't know what to do if you got into a trade that's profitable or unprofitable and it starts running in your favor. Panic is going to set in and it's going to paralyze you. And you can be paralyzed in extremely fast, profitable trades. It could be overwhelming and bewildering. Just as much, and many times, if not more, than a losing trade. See, a losing trade, you'll be willing to hold on to a losing trade because you think if you hold on to it long enough, it's going to turn around. It just can't keep going. Well, on CPI, it can. And when you think it's over and you have no breath left in your lungs, it curb stomps you. And then it's it. You're over. It's over. Not only are you blown out in your account, but now your desire to ever want to trade again.
Oh, am I audible now? Am I audible now? Sorry for that. Am I audible now? Oh, sorry for that. Sorry for that. Kindly give me a mic check if I'm audible. Oh, I didn't take auto explaining. I'm so sorry. Is the audio good now? So, oh, sorry. Is there voice now? Can you hear me now? Check 1 2, check 1 2. I think I'm audible. Now, I was saying that I marked this fair value gap here. Do you see this swing here? This buy side liquidity. This swing high in the 5-minute. I told you this is a buy side liquidity. At the same time, there was a fair value gap in the 15-minute time frame. You see this fair value gap in the 15-minute time frame. I told you when price around, I told you I want to see price coming to that buy side liquidity. This fair value gap, it's a premium array. I want to see price going down to this sell side liquidity here. Yeah, also you see this buy side liquidity, this area, this is a buyer side. The liquidity in the 5 minutes is at swing high. Also this one, so price came to it, swept it inside the 50 minutes. I want to see price declining lower to this sell side liquidity now. To these. But the first one, the sure bet one, it's these ones. But let's see actually how price is doing. So that's what we are expecting, is to see that price decline. You see also this one is a 1 minute fair value gap. So if price disrespects that and comes to this, I don't want to see price coming here. If it comes to this buy side liquidity, you are obviously wrong. But as for now, you see, this is what I was watching down this area. Now let's see what price will do. Let me just put this what short here, then target there. Welcome back, Algo Frames. I thought you will not be around for today, but yeah, let's continue. Let's see if this price actually right and decline to this sell side liquidity. But the first one is this one. Let's see what price does and if we are correct. And also remember, this is the last trading session if you're trading forex. So if price comes and stops us out, okay, this is the level I don't want to see price. If price comes, stops us out, I'll actually end the live since it's a Friday, and yeah, so let's watch what price does. Expecting those lower prices to be taken out, those sell side liquidity. If it doesn't and comes, takes us out, we just leave the live and call it a week and wait for next week. Yeah, that's the correct area. Also this order block. So let's watch what price does. Telling us we are wrong, but let's wait for it to touch our stop loss. Yeah, this is the order block in the 5 minutes. You see this? This is the order block here in the 5 minutes. So that's where I've put my stop. So if price is actually doing you see this inside a fair value gap, the reason why you might be wrong also, you see this is a fair value gap. Price inside a fair value gap, but there is no market structure shift here. So this high, but if you see that price went down, created a high, then declined lower, then did a market structure shift and entry in a 1 minute, this fair value gap. But I want to see those fair value gap being disrespected. But the order block is in the 5 minute. This is it. There I've put my stop loss. That's the area that I've put my stop loss. So if price is actually wrong, taking out that order block, disrespecting it, we'll know that we are wrong. And yeah, so if you are wrong, let me show you. See how that price actually behaving. So came into the fair value gap, consolidated, we did a market structure shift here. You see this in the 5 minute, then declined lower to a what? To a lower time frame. What lower time frame? This fair value gap. Yep, and we are wrong. Actually, I think we are wrong 2 times to this week. I think the order block will be the doji green candle, including wick or just body. You see that fair value gap, price came to that fair value gap, market structure shift, entering to fair value gap. Yeah, it's actually going to this. So you see how price actually came into this. If it has not taken out my stop loss at this moment, these are where areas where, while I'm managing trades, usually take some small partials when prices yeah, we can move our stop loss a little bit up, but according to my rule, I can't move my stop loss because I'll incur a lot of losing trades. I'll incur a lot of let's let it be hit. Yeah, later it might come down. Okay, moving the stop loss at this scenario, at this late week, just moving the stop loss will increase more risk. Yeah, we're actually supposed to be looking at the intermarket analysis here. You see also even the euro, it's inside a fair value gap. The DXY, it's declining. Yeah, so you were actually wrong in that analysis, and you see, price takes us out, and price is actually going to rally up higher. But since we are having it's the end of week, I am not interested in taking heavy trades. So yeah, so price, you see how it respected that fair value gap there. This actually, if I will be trading, I'd never trade more than 1% or 2%, but it depends on the capital. So this is another block. This is fair value gap. You see how price reacted on this fair value gap nicely. Not coming, it was inside the fair value gap, then a market structure shift, then boom. But today, price has not even moved. This is from London. You see, this is from London session. No, A plus, A plus. Okay, price has moved, yeah. But the best move was when price was declining here. This decline when it was above the immediate opening price, you caught it, then boom. This is a reversal, so price actually going to reverse, but I'm not going to take a trade because it's yes, in the bottom of the discount zone. Yeah, exactly. And also you see this another block in the 15-minute time frame. Yep, you are right. So yes, it can, maybe it will. I can go to this fair value gap, then now decline, but let's watch it. But on Friday, and the A plus setup was on Wednesday, as I said, after the CPI. Thursday, we actually had good trading days. So pricing on a Friday, not a good day to trade. Not a good day to press on much harder since you've made correct analysis over the week. No need to trade. So we are actually let's see. If you want me to analyze any market before we end, you can tell me. You see, the DXY is declining lower and lower. You see. Yes, the rules are rules. Yeah, you can't exactly. This is true. See, I wanted to, if I would have moved my stop loss, see how I'll be now in deep drawdown. Yeah, so See how price actually doing. So this will be will have been carrying a lot of loss. So yeah, you see. We actually had a long week. There's some weeks that we had no lights in our area, but I was trying my best to show up. So that move I told you see this price liquid that I marked here, this fair value gap. You see that price decline then. So this after you see this fair value gap here. That's it. It's inside that fair value gap. Yes, exactly. Minimum loss and maximum profit. That's exactly. So if you see price touched this fair value gap here, price touched fair value gap in the 5 minute, yeah. Then a market structure shift. Also in the 5 minute, use a market structure shift, but I marked by set liquidity. With a market structure shift with the fair value gaps, you see price comes to it. Also the other blocks. Then price starts to rally. Just exactly at my model. Enter into fair value gap. There also another block. So price continue to rally up. Price can rally to up to this buy side liquidity, but let's see. Yeah, but no, I don't have a feeling, but let's see. So this is a midnight open, or you can come to this exact fair value gap. You see here, that's the area where price is rallying to up to. See that? This is an important area. This, see that? Yeah, it's also the fair value gap in the 5 minute. In the morning, I couldn't make it during the London session. It's actually busy and the lights were off. So this price is really up. You see this other block, price has come, touched it, then boom. It will come and tap that fair value gap, obviously, so it will come above that line. This line that I've marked. But if it reverses completely, I will have not been in this trade, and it's actual characteristics of Fridays. And we're also having medium impact news at we have medium impact news at yeah. See at 10. At 10 we have USD high impact news. High impact news. Which line? This one that I've marked. Okay, it's important because you see it's a swing high. It's a swing high. And the same swing high, it's around that fair value gap, which is going to be the next entry. The red one, this one. If this one, yes, can you say yes? If it's this one, so because you see this is a fair value gap, you see here, this is the low end of the fair value gap around here, yeah. So that's a liquidity where price will actually, I'm not saying it's a target, but that's a level where price will want to reach to. You've seen that order block stopping price from going below it. So let's see if this order block will actually if price will respect that order block. And that order block will take price to touch this line in the next two candles. Let's see it. So see, we were wrong, and we actually identified that early enough that telltale signs that we are wrong. So this is another block. Let's see if price will respect it and go to this line, or take out this basic liquidity and decline. But let's watch these areas as price comes to them. And also remember, it's not a good trading time to press so much hard because we're ending the week. And the week was so, we had move around, nice moves. I predicted the CPI correctly when I told you, when I did a pre-CPI areas that I marked. Price came, touched it after the CPI, then declined. The next day we got it again and again. And today we are actually having that losing trade. We were actually wrong, but we actually identified how we were wrong early enough. See that price actually coming to that buy side liquidity. So the Euro NZD, how to mark the levels. Yeah, let's look at the Euro NZD. You see how price actually come into that area. It's actually so precise. So it can continue to this buy side liquidity, this fair value gap, but it might reverse. Not so sure, but the signs are rallying up and up and up and up and up. Order block in the 1 minute, order block in the 5 minute here also, the fair value gap, then boom, rally up higher. Let's watch it, but I'm not interested. No, Euro USD. Having T10 for a long time. Yes, it might. So the Euro NZD, the 15-minute time frame, just let's watch it. This are another block, the last down close candle. Let's watch in the early. What do we have? In the same, we have in the 15-minute time frame, and you see here we had another block. This is an hourly time frame. The same area we have a fair value gap. Fair value gap, so it might go down in the. So remember when I told you these are level you want to look for. These are previous week high. Told you yes, I'm expecting price to go here and also candles here. It failed, but I said this is a level that is a fair. It's a swing high in the weekly. Even if I've not come, I knew it's on a weekly. Yeah, it was on a weekly. So what are you expecting is lower prices. Hey, Euro NZD price sweeps that weekly, that previous week high. Then you see how that decline lower. So what I do next is price going to this sell side liquidity. Let's mark it and we'll come back later in the week, the next week, and see if price will actually have visited this sell side liquidity. But because we're going to the trading are going to be closed, not a much area to put more concentration. And then they think they have closed or what, or I don't know. Anyway, these are in the far. You saw that fair value gap in the hourly. You see this is also a fair value gap here, which is sending prices lower to this sell side liquidity. And also there was another block that I marked there, but I removed. So what I'm saying is those sell side been taken out or otherwise, unless otherwise, yeah, price should continue lower to this sell side liquidity and also this sell side liquidity. Yeah, it might rally up higher. So it continue rallying up higher and higher. You see, whoa, it just went straight to a fair value gap, then started declining. You see, that fair value gap that I marked, I chose the correct one. So there. So you see now price actually taking out that buy side, went to that area. So yeah, then started reversing. And also a fair value gap in the 5-minute. The chart is different. Oh, Euro New Zealand. You know, I also noticed, and I'm using the forex.com. You may be using the Vantage or a brokers or a prop firms. Liquidity what do you call it? I actually also had a friend that we had different charts. So what was that? Different brokers, different prop firms, and yeah, they have different liquidity providers. So you might want to see some small differences in the. We want to see some small differences in the. You see the 15-minute time frame price come to that fair value gap. So they are usually different liquidity providers, yeah. But when they were priced, the liquidity areas, I think, yeah, the brokers that are very good in Kenya, the brokers that I usually recommend, we have FBS. They have a good leverage, and their executions are good. That's why I usually press the buy and sell. But when I'm analyzing the markets, I usually use the forex.com. So the brokers that we usually use in Kenya, you have FBS for forex traders. We have HFM, the hot forex market, I think. Yeah. We have XNES, but the XNES I don't love it because they have very little leverage. As my counter saw, 1:200, and since we don't have great capital, 1:200 is so low, or it's 1:400. I don't think so. I think so. So the best one that I usually recommend is the FBS. Scope market, yeah, actually scope markets are the best. We have a scope markets, FBS. We have a local one which is called FX Pressa, but nah, way much spreads. But the good ones are the scope markets, and we have FX Pro. But the top list: number 1 FBS, number 2 scope market, number 3 HFM, going to then hot forex. Yeah. So yeah, they are different. Advantage and wonder, they are different. That's actually correct. So the Euro New Zealand is here, but see this consolidation. Yeah, what I'm expecting is lower prices here. That favor gap also. There. Let's see if that price will be respected. Checking our DXY. See how price comes to a level, then reverses. Comes here to here. At that point, then see how price is expecting those fair value gaps and order blocks in 1 minute when you know which correct one to choose. So we might see price declining, but come on, it's London closed, it's on a Friday, price might move. Nah, not interested. We had money on Wednesday, called the markets also on Thursday, and that's enough. We have sat for a long time. Yes, the top one in premiums, and you're actually correct. Yeah, price used that, and you see it actually wants to use it as a reversal point, but so let's which is the Euro USD. No signs of reversing, but it's Euro New Zealand is consolidating because in the Euro I think they have closed, or it's the closing hours. Yep, told you. The client just as said, using that area as a reversal. See how price is declining, and we actually marked the top here. Told you he's going to use that one, then use that point as a reversal. See that? So precise. This actually moved, so there's something that has happened. You can hear it's a Trump tweet or major economic calendar that has caused that volatility in a 1 minute time frame. 12 pips. That's one crazy volatility. Yeah, it's actually will go down because you see it has taken that area has used that area that I marked there. Now we'll actually continue to our sell side liquidity that we had our eyes fixed on, this level, and also this sell side liquidity. Likes funds, baby. So yeah, watch price. Yes, it will rally, and the DXY, the Euro USD actually declined. Euro New Zealand has disrespected that fair value gap. It's actually confusing. Not used to trading these cross pairs, but Euro New Zealand, if Euro is weaker, should be going down. But you see, the GBP and the Euro are going lower, but the Euro New Zealand are going up. So you might want to use the USD and ZD. NZD USD. NZD USD. So NZD is the one that is weaker. So the Euro in New Zealand. Yeah, the NZD is weaker. That means the DXY is stronger. So the GBP will also rally down. And Euro against the dollar. The Euro is weaker now. Yeah, so it's actually, see how they actually align. So it's actually Euro New Zealand. New Zealand is weaker, and also Euro is weaker compared to the dollar. But the Euro is stronger compared to the New Zealand. You want to compare them like that so that you know which one to use. But after this moment, see that price move there, comes then declines. Just telling you the market will go. But if we had good capital, we would have gone declined. But today we would have not even taken a trade. No trades. Now, how to compare the currencies is that you see you choose to trade the Euro New Zealand. Since you are look this crosshair Euro New Zealand, so you want to use one thing to compare them. That's the dollar index. So you see the Euro USD is weaker compared to the dollar. Let me show you. The Euro USD is weaker compared to the dollar. You see this decline? Now it's weaker. You have to look about the Euro. The New Zealand, so that's the NZD USD. So NZD USD is weaker also compared to the dollar. It's also weaker. So we have two weak currencies. Again, now we have, let's take, so since the dollar is stronger, both of them, they are weaker. Now if we compare the NZD and the Euro USD, Euro versus the NZD, this is why it has rallied up. This is why it has. So if we are comparing the Euro and the New Zealand, you want to use Euro USD and the NZD USD, so that you know which one is stronger and which one is weaker. That's according to my analysis of, but I think that's the thing of how to analyze the higher time frame, or how to identify the cross currencies. But if I'm wrong, though, this stop run there rallied up. But you will want to see this, it's on a Friday, and price you see this, it's on a Friday. Price can go down, okay, it will go down, but it can go down or even consolidate. It gives us a move. You see, anybody who was buying here, this price took him out. If he was expecting price to take out those buy side liquidity, price came, took his account, started really up high. So it's actually confusing. As if finalize in the what, the order block in the Euro New Zealand. This is the order block, the bullish order block that price has actually used to rally the top. You see this rally up high, the last down close candle, this one. Price is not, you see how price actually respecting that order block and not closing inside it, the wicks, remember? So this price is actually rally. Oh, what a great buy side liquidity. There. A final question before I end the live, because it's 10 minutes to 10 and it's on a Friday, not a good. So that's the order block. Let's remove that one. You'll see prices rolling up higher. I want to go and get something to eat. So if I have show, let me show about next week. Next week we are having FOMC Wednesday. Let's look. Monday, Tuesday, Wednesday. Yeah, we have FOMC. We have FOMC on Wednesday. So the best trading days can be on a Monday or Tuesday, one of them. But FOMC, not a good trading day, but price action can actually move, but I don't want to participate in that trading day. But Thursday, prepare your capitals. Hope there will be no lights off. But Thursday and Friday, the best, but mostly Thursday. See this, you have one bank holiday, but price might move. But you see this, Thursday, good trading day, and either Monday or Tuesday, one of them. This Wednesday can actually be live, and we'll see what price will actually do trading the CPI. So we still have a good trading week. We go to go and come. Okay, they have a good trading week. We have a good trading coming week. Okay, can we plot another order block on the lower side, since again it broke the structure? The lower side, I'm actually not seeing. Price can be usually using this other order block. But you see here, if I had a currency to compare it with, I would have want to see an SMT, but I don't know a currency to compare it with. But yeah, it has disrespected that other block, so meaning we're going to tackle this buy side liquidity. These ones are going to be taken out, since also price has respected that favorable gap also. On the lower side, no, there is no. Maybe these ones, these other blocks here, but you might we don't want to consider about the other block so much. If you see them visible, they will be visible, but we can't force order block. You just want to see the ones that are so obvious and visible. Yeah. Why we just the wick, not the whole candle on the 15 minute order block? Which one? You see, also that one is the 15 minute. I don't know what you're saying, but can't recall which 15 minute order block. But this one, okay, this whole can be the order block. You can use that whole of it. But you see this in the 15 minutes, this is the order block, and we also we're also finding it in the 5 minute. You see here, but in the 15 minute, this is the order block that price used. Is the order block. Price rallied up, so it's actually going to rally to those buys at liquidity. In the 50 minute which week, there is no order block here. Oh, this one. No, these are sell stop that I took. I actually said it's a 5 minute one. This sell stop here. There isn't order block in the 15 minute. Which one? This one? Is it this one? Or this one? Or this one? There isn't order block. This one is the other order block that price can actually come and retrace to. This one is not an order block because there is no rally up. Price does not this, so this is the order block. This one. See this? At what time marker can you tell me? In the 50 minute, the 50 minute candle at 9:15, 50 minute candle at 7:15. Recent one, recent order block. This one. Well, actually, if it is this one, okay, this one, this order block. The 50 minute, no, actually it's a 5 minute order block here. You see this in the 5 minute, this another block. Now corresponding to the 15 minute, you're seeing me doing a 15 minute. It's a 15 minute week, but dropping to the 5 minute, it's the order block that got respected and started rallying up. This it was transport from 5, then going up to the 15 minute. You'll see the week here. So it was from, you see how those prices are actually, if you transpose them to a certain, if you transpose them to higher time frame, it might actually look for a week. The same idea, listen this, the same idea you've seen me marking the week here, this week here, that is the same idea ICT uses, and the new traders don't know. This is the same idea ICT uses when he's actually teaching you to analyze, to trading using the weekly wicks, in the weekly time frame, the wicks. So he actually telling you trade that week. When that week actually aligns with the PD arrays, we'll drop down to the lower time frame so that you can see the PD arrays. When it aligns with the PD arrays, that's the execution point, or that's the reversal point, or that's the entry. Same thing, like it will align with the PD arrays, but I'm not using Fibonacci, I'm not using anything, just PD arrays, and you've seen how precise action is. So the DXY, you see how that consolidation, even if it's going up, down, told you this is a Friday. You don't want to press so much hard. So until we meet again, I'm going to end the live. Don't forget to subscribe, like, share, like, the video. This is actually consolidating day. So let's meet on Monday during, I'll actually see. It might actually be a Monday on a yes, it might be the outside. Yeah, you're actually right. That's true. That's actually true. So in the economic calendar, let's see on Monday. We can have a change. This Monday. Okay, we love liquidity. Yeah, we'll actually see. If they usually when we go to the weekend and on Sunday we see a red holder just has appeared from nowhere, and we actually analyze the market that we didn't see we didn't see a red folder. So we'll actually wait for Monday to see, but we'll actually be here on Monday, London or New York. We'll see. And yeah, also Tuesday will be there. But the best trading days like this week were Wednesday, Thursday, Friday. I think it will be the same scenario for next week, but we'll actually look for something on Monday. Actually analyze those time frames. We consider the OWK. I've actually read that. So tired. So yeah, let's favor look gap, decline lower. Yeah, so let's meet on the next session as you watch price going to these lower lows and this sales elevate. These are actually my target. And let's wait for 2 minutes because we had a high impact news. Let's see if price will actually decline lower to our target. It's actually 2 minutes too. We consider that. Hope you're referring to is it the Euro USD or the what? So very trade. Actually some seconds to 10. So I'll actually end it at 10:02. 10:02, 2 minutes after the news has been released that UIM Now, as you can see, price disrespected that fair value gap, and the news release actually made prices to go up higher. And you see here, thought price was going to go lower. Price rallied up higher. Told you it's a Friday, not a good trading day. You'll actually see more losses if you start executing. Usually, I usually execute 2 times a session, then 4 times a day. Since I'm a scalp, I'm looking for those high valued. But since it's a Friday, not participating. I'll actually end the live and you see. Yeah, it's moving both ways. So not interested. Let's see what will happen for us next week, if we'll come with capital or anything. Yeah. So we are going to resume on Monday. I'm not going to execute. You see also the Euro, New Zealand also, it's touching those there and declining lower. It's a Friday, folks. It's not a good trading day. You'll actually see more losses than you actually take back your profit. But you see, this continue. Until we meet again, don't forget to subscribe, like, and share. Adios, muchachos.